All right, good morning and welcome back here to Trader Minute. Great to have you aboard. Market's been open here for a little bit, and S&P up about 13 points. We are seeing small caps lead the way, which has been a rarity, but we are seeing that happen here this morning as they are clawing their way up. We're seeing a little bit of snapback in some of the laggards yesterday, like a Tesla, for example. But in general, same market, same elements. No real major change where we could say, well, something different is happening. No, it's still, what, bulls are just absolute Teflon here in this market. And as a side note, found it quite interesting this morning to hear U.S. President Trump calling for quantitative easing to happen out there from the Fed, calling for the Fed to not only cut rates but to go back into quantitative easing, which is wow. And I don't think it has anything to do with U.S. President Trump looking at the economy and going, "Wow, this thing's going to collapse." It has everything to do with trying to really just prime and pump it as much as possible. Which if I were in his position, I'd be calling for the same thing. So it's but very interesting to hear that. And on the other hand, we hear about how great the economy is going. So, anyway, it's interesting world out there, and a very interesting move here on this market of late. And like we mentioned earlier this week, it just looks like it wants to go and print that new high, and that's probably what we see. Probably what we see come in before we see kind of a pullback or something of that nature. And we've talked about the reasons why, the market is tracked on higher. Now, I titled this video "The Future of the Challenge" because I want to talk about that here, as obviously, I went after this challenge with a very kind of bearish notion. And as the market came up into some of these resistance areas, as we started to see some of the metrics breaking on down, as we came off of a pretty sharp rally, I decided, I'm going to take this with a fairly bearish notion here. And we had a few trades kind of pay off and work nicely, but overall, being patient with anything bearish has killed me. And between the XLP, Home Depot, and now the EM, that kind of patience with a bearish trade has absolutely been death here in this market. Now, I still do have EEM, which has about 2 weeks on it, which has a little bit of a shot if there's a big drop. But to be realistic, it needs a heck of a lot, and a heck of a lot of things to happen. Which it could, and if it does, I will definitely take it and go. But been asked about the future of the challenge here this week, and rightfully so. So I want to speak to that a little bit here. And I will have more details coming out next week. But my number one goal when I started when I started Trader Minute, and we started with the challenges, and we had a few go to zero, and then we had a few end at 10K and 49K, and we had some ups and downs, and then here over the last while, it's just kind of been a little bit of more of a slog, as I've not been able to gain traction here with the challenge. I get suggestions all the time. We'll do this, we'll do that, we'll do this, we'll do that. Well, a lot of those things are either personal preference or, there's not a lot of consistency in them. And, it's just one of those where I know what's worked for me before. And so I'm not going to stray away from that. And I know the odds are never in my favor when it comes to a challenge. I didn't think I'd go this many without having a really strong push. Never really thought that, and I know that I said after one challenge, hey, I may never have another successful challenge again. And I was hoping that wasn't true, but I knew that was the reality of of the market and trading options. But throughout it all, the number one goal for me personally in terms of the challenge is to take me out of it, is to take Jeff out. Now, what do I mean by that? I don't mean me not trading. I don't mean me not trading the challenge. I don't mean me not being involved. What I mean is automate the entries and exits, with the challenge format. And this sounds pretty okay. You know what? We see automated trading out there. We have quants and everything else, and great. And I've been working on this for years now, for years. And it's fairly easy to do, certain aspects of it, and it's a little more difficult for other aspects of it. But I want to automate the challenge for a number of reasons. Number one, so that there's a level of consistency that takes the human element out of it. Because no matter how we trade, no matter how we are involved in the market, there's always a human element, and human factors typically are not positive factors. In fact, historically, human factors are negative factors. Now, sometimes it does go the other way, but take me out in terms of the challenge. Number two, the challenge was meant to kind of be fun, was meant to be, kind of this free-flowing type of thing. And as time has gone by and whatnot, and there's more of the whys and the hows and all that, it's lost some of that. And, automating the challenge allows me to now go and compete against the automation, which is very fun for me personally. But I knew that this goal, or to take Jeff out in terms of the entries and exits on challenge trades, was going to be a lofty one, and had no hopes that it would happen anytime soon. And we put together several things. We've been working on a lot of different things in the background, different trading systems and whatnot. And when it comes to setting up automated trades, that's so easy. Creating automated entries, piece of cake. Just absolute piece of cake. You can go out and say, hey, this is a tendency. This is a high probability tendency. Boom, when XYZ happens, boom, buy. That is about as easy as it comes. And, to trade stock with that's even fairly simple, fairly straightforward when it comes down to it. Okay, that's not the hard part. And in fact, I have about 18 different automated entries that I like, that I think work, and that have some good track record there. The difficulties with automating a challenge, okay, revolve around a couple things. Revolve around, number one, converting stock signals to options. Right? Do you go with the short term? Do you go with the weekly? Do you go with in the money? Do you go out of the money? Do you go with a little longer term? Do you go with the spread? What do you do about the gaps, right? Because gaps, when it comes to stocks, it's a little easier to exit, but when it comes to options, right, a stock can gap and move $1.50 before the option even opens up, right? So there is a big factor here when it comes to converting stock signals to options. Exit points. Where do you put your exits at? we've talked about exits a lot, and all the different theories and different ideas out there. And some people are, 100% gain, you have to, just take it, or 20% loss, you just absolutely take it. And we could set hard, fast rules like that. And in fact, you'll see a few of those. But the reality is, exit points, there's no consistency in them, right? There's absolutely no consistency, because sometimes, you know what? You're patient, you hold through an exit, man, it really pays off. And other times, no, not at all, right? Not at all. So it's, one of the big difficulties comes down to exit points, as it's very easy to see all the indicators and everything line up perfectly to get an entry point, because you can wait for what you want to see. But with an exit, now you're talking about, you just have a whole bunch of different things going on and different happening, different movement. It's not like you look at those indicators on a given day and say, well, at this stack, it has a probability of doing this, that, or the other. So exit points become a significant difficulty, and one that's pretty easy to deal with when it comes to stock. But again, when we go and convert that to options, now it's a little bit of a different game. Another difficulty here is applying the challenge format. Because when it comes to testing automated entries and automated signals, right? You look at a batch. Quants, they look at a batch. They look at a batch of 50 trades and they go, okay, you know what? Boom, here was the consistency with it. We applied 50 trades here to it. All right, it came out with X amount of gain per trade. These were our outliers. This was our big win. This was our big loss. So they could break down the data because they have a large data set. When it comes to a challenge, you don't necessarily have that large data set. I can't go out there and put, $3,000 or $2,000 or even $1,000 into 50 trades to now say, hey, what's the data set, right? I can't do that in a challenge environment, because the challenge environment is such that it builds, right? As things pull back, the trading gets lighter and lighter, and just a lot more sitting on the hands. And as things start to grow, it's a lot more active, and it's a lot more in and out as things start to grow. And so applying the challenge to these automated entries becomes pretty difficult, because we have, what do you do in situations with no signals? I mean, you go 4, 5, 6, 7 days with no signals. That's no fun, right? That you could deal with, but what do you do when you have 7 to 8 signals on the same day? Which, this is common. This is actually a lot more common than the no signals. Which one do you pick? Who do you use? Do you put some human intervention in that? Do you say, well, Jeff, you pick one, or you pick 2, or you pick 3? Because you can't go out and trade all 7 or 8. And so this becomes arguably the biggest challenge. What do you do when there's too many signals? What do you do when you're running with a trade and now you get another signal, but you don't have cash for that? Do you take off the old trade and go get into the new trade? So you end up with a bank of signals and entries, but you're still left with this: which ones do you choose, and how do you choose them? So you can start to narrow this down a little bit, right? So you can track the watch list. So you can track the watch list, and you basically take and go with highly liquid, low spread options, right? And those you filter out. You say, all right, I'm going to stick with those types of stocks and stay away from the Triple M's or the Honeywells, who just not as liquid, higher spreads, and all of that. But what happens when you contract the watch list is you get a lot more periods of no signals, right? So the smaller the watch list, the more no signal periods you go through. The larger the watch list, more of the almost too many signals to deal with. So these have been some of the difficulties and some of the things that I've wrangled with over the years. To try to automate the challenge and to really kind of take it and say, all right, you know what, boom, here's this concept. It's automated based on X, Y, and Z, and now I can go out and say, all right, that's going, and now, all right, Jeff, let's go beat it. Let's go beat the robot. And, to do that, you need to have a robot that's functional. Now, I'm not looking for a robot or an automated system where the challenge is going to be, going to 100K every time. I'm looking for a robot that 3 out of 10 challenges, right? 3 out of 10 challenges, it's going to go over 10K, right? That's what I'm looking for. The other 7, it's going to go to 0. But 3 out of 10, I want it going over 10K with the kicker that, boom, it has that potential for that 100K mark. I don't want to take that out. If I take out that 100K mark, it's a lot easier, to kind of put this together. But I don't want that. I want there to be that, that carrot at the end, because let's face it, that's why we trade. Right? That's why we trade, and there's no way I want that out of here. And so I've wrangled with different things, different technicals, different automations. I've live traded some of this. I've virtual traded some of this. I've added some of these signals into challenges, that we've done. In fact, Home Depot. Home Depot was one of the signals, and gave a strong bear signal right here. When I got just the day or 2 days after I got into, or 2 days before I got into Home Depot. But one of the things that automation does, and one of the advantages to automation, is it takes out that, are you right? The element of human trading is, okay, I think I'm going to be right. If I can wait this out, I'm pretty sure I can be right. And by right, I'm going to be making money. That's an element that comes in from a human standpoint. And that's an element that's completely taken out of an automated standpoint. Because what happened was right here, after this reversal day and this up day right here, the algorithm turned and flashed a strong bull signal. And it's been running bullish ever since. And so had the automation been working, had it been automated, basically what would have happened is I would have been in. I would end up taking about a 40% loss, okay, by the time it was all said and done with a shorter-term option, okay, because I would not have done the longer-term option here with it. I would have been about a 40% loss, and then would have been in here on this day. Now, the automation would have been out. Right here on this mark here, with about 120% gain with the option that it chose, and then it would have been in again right here and still be running here with the trade. The advantage to the automation is it takes the who, whys, hows of the market out. It takes the, what's this worry? Are we worried about this? Are we worried about that? Are we concerned about this? Are we concerned about that? That creeps into any type of trading. It takes biases completely out, bullish, bearish, just completely throws them away. And so my ideal has been, hey, you know what? I have the market vibe, which takes and it has been a comprehensive look of the market. It's not always correct, but when you look at it over the course since 2015, the accuracy there is phenomenal. And can I now add add kind of an automated challenge here? Now, here's the thing with it. I think I'm very, very close. I think I'm very, very close to having this. In fact, closer than I've ever felt before. But I don't feel I'm there 100% yet. To be able to roll it out and to say, hey, the next challenge is going to be completely automated here based on these signals. Couple reasons why I don't feel it's 100%. The biggest one is this signals to options. Which options are the best? Because which options are the best really comes down to market environment. Are we in a trend environment? Are we in a consolidation environment? But applying that too much, you lose a lot of gain. You lose a lot of upside. And so which signals do I apply to the options? Or which options do I apply to the signals? Excuse me. Do I go weeklies? Do I go monthlies? Do I go 3-month options? Which ones do I do? That is the area that I'm kind of stuck on. Exit points, got those. Applying the challenge, I think I have it. How to deal with no signals, 7 to 8 signals on the same day, pretty sure I have it. Pretty sure I figured those out. Is it a foolproof, absolute perfect? No, but good enough to really make the challenge stand out? Yeah, absolutely. And so I think about where the current challenge is now. I think about where I am with my testing and going through this automated process here. And I think what I'm going to do here with the challenge is I'm going to do an exercise over the next 3 weeks where I'm going to go and kind of do this part right here and do the testing of this part with you and live. I will show you kind of which signals are coming in each day. We'll go and convert those signals to options. We'll convert it into a challenge format, and I'll essentially be virtually running 3, maybe 4. I haven't decided yet. 3, maybe 4 challenges at the same time off the same signals, just using different options. My hesitation with this is, one, because it is, because it's just not totally ready to go, and I know there could be some other hiccups that come in along the way. There's still something where, in the next 3 weeks of testing, something could go awry, and I go, man, I've got to go back and re-examine how I'm applying this to the challenge. And so even after those 3 weeks, it may not be ready to roll out. The other disadvantage to that, not live trading, meaning it'll really stink if it works. Right? It's the worst part about virtual trading is when it works. If it doesn't work, you go back to the drawing board and you relook it and re-examine things. When it works, you go, man, I wish I were in that, live. But it's the next step to getting this automated entries and exits, and it's the next step to getting it automated and then adding kind of being able to take, my own kind of trading styles and my own kind of trading looks and compete against the 100K bot. Ultimately, I'll be kind of competing against myself because these are my principles. These are the things that I have, looked at over the years. These are some of the tendencies that I have seen over the years, coming into play in the market and just taking the human element out of it. But as we go into next week, and it won't be on Monday, but most likely Wednesday of next week, I'll be ready. And we'll go out and we'll take a look and we'll convert these stock signals to options, right? Now, there's going to be something very different about this exercise. It's going to be one where there's only 2 times a day where we look at stocks, we look at the challenge trades. It's only going to be after the first hour of the market and with 1 hour to go. Those are the only 2 times where challenge trades will be altered, will be dealt with, will be where anything will happen. And so what does that mean? Well, that means that something crazy could happen in the middle of that. And the only way to really automate it is to say, hey, crazy's going to happen. And it's going to happen for us sometimes. It's going to happen against us sometimes. And see how those balance out. And in general, with my testing, it has balanced out. I know a lot of times it never feels like that when we're trading, but that's what it'll be. And so it will be me jumping on video at those times of day. I'll show you the spreadsheet. I'll show you the testing. I'll show you the moves that have to be made based on that. And, we'll go out and do that, and we'll trade all of these in the virtual account. Now, a virtual account has a 15-minute delay. It doesn't necessarily reflect the live pricing of options. There's going to be a margin of error there, and we'll talk about that as it goes, as I will kind of do it on the Thinkorswim virtual account, but I will also log on the spreadsheet. I will log what the option value in a live trade probably should be. Traded plenty enough to know, pretty much what those should be. So this is what I'm going to do here, starting next week here for the challenge. I'm not going to start up a brand new challenge right away. I'm going to let EEM give some time. I'm going to go in and march with this for the next kind of 3 to 4 weeks, and I'll kind of let you in, show you, what's kind of going on with it and how it's working. After that, if it does get applied and we say, all right, I'm going to go do the next challenge with this, it is something where I'll have to make a few decisions on a few things, but it will still require me to be around and talking about things, and we'll still go and look at markets and do trainings and different things like that. But hopefully, it allows me to kind of step in and compete against the algorithm, and that's one of the things that I'm looking forward to doing as we go forward. And yeah. So anyway, that's what I'm looking at here for the next several weeks, and we'll be running with this and showing this to you and how they apply, and you'll hear me say this a bunch. Hey, here's the buy signal, here's the sell signal. You can take it, run with it, live trade it as you want, but I'm still in the testing phase here, with them overall. Okay, just to give you some examples of some stocks that have triggered, here of late. Some of the stuff that I've talked about, like Goldcorp, right? That I talked about Goldcorp back here in March. It triggered bullish. Here with this, Johnson & Johnson triggered bearish on Monday. And, with the market going up, it's kind of continued to drop, just to kind of give you some example of what some of these have looked like. Raytheon, when I talked about Raytheon on this break, it triggered on the algorithm to the downside. Halliburton yesterday triggered to the upside on the algorithm. So these are some of these picks that I've been showing you here over the last several days. Most of them have been with the algorithm. Baidu has been with the algorithm, and so you can see most of these with the algorithm have been fantastic. One exception, Target, but the algorithm pops it out, with before it gets to its highs yesterday. But that's one where, the algo didn't come in. Still waiting for the Philip Morris trigger to come in, for me personally. But on Wednesday, the algorithm triggered here for Philip Morris on the downside. So these if you go and you look at the videos I've done this week on some of my favorite picks out there, they're not just me going and saying, hey, you know what, I like that stock, or I like that stock. These are ones that are triggering on the algorithm. These are ones that are triggering on this automated system, automated entries that that I've been putting together and have put together, and all of these are would be challenge candidates here overall. One exception, Raytheon, options just not good enough to have it there for the challenge, but Baidu, Philip Morris, Target, Goldcorp, Newmont, Halliburton, FCX, all of them. We talked about FCX yesterday, but all of them, definitely in that zone. Okay. All right. So hopefully that answers some of the questions on the future of the challenge and what I'm looking at here. I still it's one of those where I always have to say it at the end or as a challenge goes is the challenge philosophy is still something that I strongly subscribe to and strongly believe in, and it's one that is one that I'm not going to make changes to that philosophy because it has worked for me many, many times. And it's one where, look, I took on a bias this challenge of strong, bearish bias. That bias has not materialized. Had I not been in a challenge philosophy or challenge mentality, it would have been significantly more costly. And I know that doesn't mean a whole lot for those of you who, you scrimp for 3K to run with a challenge, and that's all you're trading with. But those of you with the larger amounts that do the challenge just for throwing a little bit in, it's one of those where where that that kind of challenge mentality keeps things throttled, keeps losses from growing out of control, and is ultimately what I subscribe to, and why I run the challenge. Have my bias paid off here this quarter? Been a home run. Had I been fully tracking with the algorithm for the challenge, it's very difficult for me to look at the results of that algorithm here over the last 3 months and compare it to the challenge results, because it is night and day what the automation is and what my return on this challenge is right here. Okay, so anyway, we'll kick that off here next week. Looking forward here to that. As far as today and the market and what's going on out there, it is one where, hey, it's a jobs Friday. Could we see it reverse? Yeah, we could. I still think this 28.85 level is the level where, if you want to get short, you look for the market to close below that level. Anything above that level, you do have to be a little more cautious, but we're dealing with a market that could pull back at any moment, and could have a sizable pullback before going and hitting new highs. But there's just no real sign or no real dynamic for that here. So far when we look at any of the metrics. All right. Again, thanks for hopping on. Have yourselves a fantastic day, fantastic weekend, and we'll talk to you later. Take care.